Some people chase lottery tickets. They hope for one big, explosive win. Handy Soetedjo is not one of them. He is a builder. He is an architect of systems. His wealth did not come from a single lucky break. It came from a disciplined process. He turned small, calculated steps into a significant fortune. This is the story of his milestones to money strategy. It is not about getting rich quick. It is about getting wealthy smart. It is a blueprint for anyone who wants to trade small, consistent efforts for massive, long-term results. Handy Soetedjo started with almost nothing. He did not inherit a business empire or a trust fund. He began his journey in a city with limited opportunities, armed only with a fierce work ethic and an insatiable curiosity. Today, he is a multi-business owner and a respected voice on practical financial growth. His story matters because it is repeatable. It is not a tale of genius that is impossible to replicate. It is a demonstration of principles that anyone can apply. We will deconstruct his journey, milestone by milestone, to reveal the simple yet powerful mechanics behind his success. The core idea is simple. Break every large goal into small, measurable milestones. Each milestone must have a clear financial outcome attached to it. Did you hit the target? Good. Move to the next one. Did you miss it? Analyze why, adjust, and try again on a small scale. This approach removes the paralyzing fear of massive goals. It replaces it with a clear, actionable path forward. It turns the vague dream of building wealth into a concrete, day-to-day process of hitting small, achievable targets. This is the essence of Handy's method. This video will dissect that method. We will walk through his early career. We will walk through his first business ventures. We will walk through the strategies he used to scale. We will look at the real, tangible numbers that marked his progress. We will list the businesses he owns now and explain how they fit into his grand design. Finally, we will distill his philosophy into actionable advice you can use, starting today. This is not just a biography. It is a user manual for constructing a life of financial independence, one deliberate milestone at a time. The path is clear. Let's, begin the walk. Handy Soetedjo's story does not begin in a corner office. It begins with grunt work. Growing up, he understood that education was his primary lever. He studied relentlessly, but theory was not enough. He took on a string of part-time jobs while still in school. These were not glamorous positions. He was a stock boy. He was a cleaner. He was a delivery runner. The pay was minimal, but the education was priceless. He learned the front lines of commerce. He learned to listen to what a customer was really asking for, not just what they were saying. These early jobs were his first milestones. Each job was a data-gathering mission. While stocking shelves, he observed which products moved fastest and why. While making deliveries, he learned the most efficient routes through the city, knowledge that would become invaluable later. He learned to deal with difficult people, to de-escalate complaints, to turn a frustrated customer into a loyal one. These were not just tasks to be completed, they were skills to be acquired. He was building his personal toolkit. He was also building his first network, not executives but hard-working people. His first full-time role after his studies was in 1998. He worked as a junior procurement officer for a mid-sized trading company. The pay was modest, about $1,200 a month. His job, find suppliers and negotiate prices for basic goods. He treated it like a game. How could he get a 2% better price? How could he secure delivery 5 days faster? He created his own spreadsheets to track supplier performance. Within 18 months, he was saving his department over $50,000 a year, simply by optimizing small, overlooked details. This obsession with small optimizations became his trademark. He didn't try to fix the whole supply chain. He fixed one small piece at a time. Find one supplier, negotiate a slightly better deal, lock it in, then move to the next. Milestones to money in its infancy. Each negotiation was a milestone. The money saved was the tangible outcome. By 2003, Handy had saved around $15,000. It was not a fortune, but it was his launchpad. He saw an opportunity not in a high-tech startup, but in a mundane, essential service. He opened a small repair shop for common household appliances. The initial investment was about $10,000. Rent for the shop, basic tools and equipment, a small inventory of spare parts. The business, named Reliable Repairs, did not explode with growth. In the first year, it barely broke even. But it was the perfect laboratory for his developing theories on business systems. Handy did not just fix things, he documented everything. A one-page checklist for diagnosing a broken washing machine, another checklist for repairing a faulty microwave. He timed how long each common repair took. He tracked which spare parts were used most frequently. He was not just running a shop, he was building a machine. His goal was to create a system so clear and efficient that someone with less experience could follow the steps and achieve a predictable, high-quality result. This was his first taste of true scalability. After the first year, he hired his first employee. He did not just show the new hire how to do repairs. He handed him the checklists and the process documents he had created. He trained the employee on the system, not just the tasks. This freed Handy up to work on the business, not just in it. He spent his time talking to customers, asking for feedback, building relationships with local apartment managers. He used their feedback to refine his services and pricing, creating service packages that offered better value. This shift marked his evolution from a technician to a business developer. He realized the real product was not the repair itself, but the repeatable system that delivered it. By 2006, Reliable Repairs generated about $4,000 per month in consistent profit. He had 2 employees who followed his documented procedures. The business could operate for days without his direct involvement. He had successfully built his first small, cash-generating machine. The lesson was profound. Systematize the predictable so you can humanize the exceptional. He was now ready for his next move. With Reliable Repairs running smoothly, Handy did not just sit back and collect profits. He saw patterns. His customers often asked if he knew a good plumber. His customers often asked if he knew a reliable painter. His apartment manager clients needed more than just appliance repair. This was his cue to scale, not by building everything himself, but through intelligent partnerships. He started by identifying the best independent plumber and the best electrician in his area. He did not try to hire them. He proposed a simple partnership. He would refer his clients to them. They would pay him a small 10% commission for each completed job. This was a low-risk, high-leverage move. He did not have to invest in new tools, new vans, employee salaries. He was simply monetizing the trust he had already built with his customer base. He created formal, one-page agreements that clearly outlined the terms. He vetted his partners carefully, choosing them based on reliability and quality, not just price. This small network of trusted partners allowed him to offer a wider range of home services without adding significant overhead. By 2008, these referral commissions were adding an extra $1,500 a month to his income. He then took the next logical step. He saw that his partners and his own business were all buying supplies from the same places. He approached his core suppliers, using the combined purchasing volume of his small network. He negotiated a bulk discount of 5 to 7% for everyone. He passed most of the savings on to his partners, keeping a small percentage for himself for organizing the deal. Diagram: Handy's business at the center with arrows to partner businesses and suppliers. He was creating value for everyone in the ecosystem, with himself at the center. This strategy of finding small points of leverage became the cornerstone of his expansion. He did not take massive, risky leaps. He built small, sturdy bridges between existing assets. He connected his trusted customer base with trusted service providers. He connected his network of providers with suppliers to get better pricing. Each step was a small test. Each successful test became a new, stable system that generated cash flow. He was scaling not through brute force, but through strategic alignment. He was proving that you could grow a business empire one small, smart partnership at a time. That was the approach he stuck with. Handy Soetedjo's financial story is one of boring, relentless consistency. There are no billion-dollar valuations, no dramatic IPOs, only the steady, upward march of numbers on a spreadsheet. By 2010, his personal net worth crossed $500,000. Not from a single event, but strict financial discipline. He lived on less than 30% of his income. He saved 20%. He reinvested the remaining 50% into his businesses. Let's look at revenue growth. 2003. About $40,000 gross. 2007, over $150,000 annually. Systems in place and 2 employees. Healthy 25% net profit margin. 2012, combined services, $700,000 annual revenue. He grew using profits, not massive debt. One small loan of $25,000 in 2009 to buy a service van and upgrade equipment. He paid it back in 18 months. His financial rules were simple and non-negotiable. First, track everything. He used simple software to categorize every dollar. That gave him a crystal clear picture of his finances. Second, maintain a cash buffer. He kept at least 6 months of operating expenses in a separate savings account. That war chest let him weather slow months and seize opportunities. Third, keep personal lifestyle modest. Avoid lifestyle inflation. 2018. Enterprise's 2I's annual revenue, consolidated net profit, $450,000. His personal net worth surpassed $3 million. Numbers are impressive, but the method matters. Slow, deliberate accumulation. Focus on profit, not just revenue. Prioritize cash flow over vanity metrics. Wealth. How much you keep and how hard it works. His success came from operational discipline, that steady, boring discipline. As his capital grew, Handy Soetedjo began to build a portfolio of businesses, each serving a specific strategic purpose. He did not diversify randomly. Each new venture was a logical extension of his operations. They were designed to reduce costs, increase control, create a new revenue stream. This created an interconnected web of companies, a machine where each part supports the others. His portfolio today is a masterclass in strategic diversification. First, the service company group. From simple appliance repair to full suite home and office maintenance, it became his primary cash cow. Stable, predictable, deeply rooted in the community. It provides steady cash flow and a large captive customer base for cross-selling. It is the engine room of his operation, producing reliable profits month after month. Second, a logistics and warehousing firm. His businesses were spending heavily on storage and moving goods. In 2014, he bought a struggling warehouse and a couple of trucks. He systemized it, optimizing routes, tightening inventory management. Now it serves his companies at cost, cutting overhead, and it sells excess capacity to local businesses, turning costs into profit. Third, a small-scale manufacturing unit. It makes simple components and cleaning supplies for his service companies. Fourth, a digital services arm. Started in 2017, it builds websites, booking systems, and marketing campaigns for partners and local clients. Finally, a property holding company owns the offices, shops, warehouses his businesses use, turning rent into mortgage-style asset building. Handy Soetedjo's journey from a part-time worker to a multi-business owner is not a story of magic. It is a story of method. It is a practical guide to building wealth and a meaningful career through deliberate action. His success can be boiled down to a few core principles you can begin applying immediately. These are simple, actionable rules. Absorb them. Use them. They are the keys to the kingdom. The first lesson is to embrace the power of the milestone. Stop staring at the mountaintop. Break your biggest goals into the smallest possible steps. Saving $10,000 starting a side business, getting a promotion. Define what success looks like and attach a number to it. Your goal is not to get in shape. It is to walk for 20 minutes, 3 times this week. Your goal is not to start a business. It is to identify one problem you can solve and interview 3 potential customers by Friday. Master the art of the small, measurable win. The second lesson is to build systems for everything you do more than twice. How you answer emails, how you pay your bills, how you onboard a new client. Document the process. Create a checklist. Make a template. This frees your mental energy and allows you to focus on high-value problems. More importantly, Systems are the prerequisite for leverage. You cannot delegate, automate, or scale a task that only exists in your head. Systematization is the bridge from doing the work yourself to owning the machine that does the work. The final and most crucial lesson is to become an artist of leverage. Always be asking, how can I achieve a 10 times result with a 1 times effort? Partnering with someone who already has the audience you want using software to automate a repetitive task, reinvesting your profits to let compounding do the heavy lifting for you. Handy Soetedjo built his empire not by working 10 times harder than everyone else, but by constantly finding and applying points of leverage. Start small, build systems, and then apply leverage. That is the playbook. That is the path. Well, all right, go do it.